let's now go across to Ashank Desai, Vice Chairman and MD at Mastek. He's with us. So, what is the quantum of investment, and what would be the revenue potential from the recent investments that you've made?
Whatever we have disclosed in our press release is what all the information we would like to give there. And I'm sure that we are discussing that. We are taking almost small percentage of Volteo Edge. What is important is not investment as much as the long-term partnership which we have got because of investment. We are getting into this investment more to increase our market penetration and less about financial benefit out of it. If there is, it is good, but it's a fast-growing sector, company is doing very well. But our aim is partnership which allows us to strengthen our position in our existing sectors, as I said, retail, manufacturing, healthcare, etc.
Sure, Ashank. So that was the strategic investment that you have made in Volteo Edge that will allow you to get the IoT capability. And this is not just about getting the revenue out of it, but creating the capability. Got that point. But, talking about your business as a whole, 70% of your revenue comes from UK as well as Europe. These are the two geographies which are facing the maximum amount of recessionary headwinds. In that context, what's the expectation for 2023 in terms of client budgets, order bookings, etc.?
As I said, we are platform partners in 4 areas, and in each of them there are going to be large RFPs coming over next 4 years. In fact, it is a multi-year partnership where only selected people will get full as we move ahead in the next year in terms of potential that we are building for business. Having said that, yes, it is true that there has been a delay in decision making. In IT industry as such, because people want to make choices between digital transformation part of budgets versus cost saving part of budget. And we are in digital in a big way, so it of course drives our growth. Any cost saving initiatives also lead into more offshoring what is existing on site. So that's a good opportunity too. So we have to see how that will pan out next year. Immediate impact is there, which is delaying of the decisions. Yes, that does affect in some form.
So your margins continue to be in a downtrend. When do you expect it back at 20% plus range, especially in the wake of headwind currency benefits that you get?
I don't want to give any guidance specifically in when we will move to 20%, but yes, our margins have been lower because of pressure on the revenue, partly and partly because of the salary rises that are happening in the industry because of attrition. Now, the attrition part, I am hopeful, is going down, although it is still on the higher side. We are seeing slowing down of attrition, hoping that in the next financial year, we will have a better control on attrition and the costs from the supply side of the business. From the demand side of business, there has been a constant effort over last 1 year in terms of increasing the rates with the customers, and some of that outcome will happen next year because you always operate out of your backlog. So you always have 12 months or 1.5 years, 2 years kind of business with you, and that is at an older rate. But the new rates are now kicking in. So given all those two things, I am looking very, very positive in terms of next year's performance, in terms of EBITDA margins.
Thanks, Ashank, for joining us. That's Mastek for you. Hasn't had a good year at all. The stock is down over 40% this year and is trading at inexpensive valuations of less than 15 times FY24 earnings, given the headwinds that he pointed out, and the street is worried about a bit of a growth concern challenge coming in. But